Hello and welcome to this month's short information video on the mortgage part of the house moving process. And what better person to spend some time with today than Laura Lamb here from the mortgage company in Whitney. Morning, Laura.
Morning, Tim.
Thanks very much for having us here today.
Thanks for your time.
Before we start though, just a couple of things. Firstly, what we're talking about is general mortgage advice and not individual advice for anybody in particular. But also just to remind you that your home could be at risk if you do not keep up repayments on a mortgage or another loan secured on it. What does that mean then, Laura?
Well, Tim, when we talk about a mortgage being secured on a home, which we see all over anything to do with mortgages, it's really making sure that the consumer is aware that by taking a mortgage, they are agreeing to the security being held against their property. If they fail to keep up repayments on their mortgage, then in effect the bank could repossess their property.
Don't want to go down that road, do we?
No, definitely not.
Perfect. So in 2015, around 1.2 million homes were sold in the UK, and around a third of those were purchased with cash, so no mortgage involved at all. That still leaves about 2/3, or around 800,000 homes that were purchased with a mortgage, and around £214 billion was lent out to people to purchase their homes using a mortgage. But just how much do we all know? Well, over the last few weeks we've been asking our clients general questions about the mortgage market and what they do in pursuit of obtaining a mortgage. So let's ask some of those questions of Laura today and see how we go. No pressure then, Laura.
That's fine.
Okay, so the first question then, how soon should I speak to somebody about my mortgage if I'm looking to move?
So, we would say at the very early stages, because what you don't want to do is waste your time or other people's looking at properties that potentially you can't get a mortgage on. So we're always happy to speak to people, even if it's just a general inquiry, but the very early stages.
So the earlier the better,
yes.
Really? Okay. And so what's the difference between speaking to a lender direct or speaking to a broker like yourself?
Well, obviously there's different types of brokers, but in our scenario, we are whole of market. So you come in and you sit down with one of the advisors here, and we are looking at every single product within your bracket of what you're looking at. So it saves you literally walking the high street to try and find the best.
Right, okay, perfect, lovely. What do you make of the online mortgage websites?
I think they can be useful. They certainly give people information around mortgages. Where we see people struggling is when they try to compare deals on those websites. Some of them don't show fees, which is obviously a really big thing that needs to be factored in. And generally it can be quite easy to get confused with those websites.
I always prefer sitting down with somebody rather than doing too much online.
Yeah, absolutely, and if it's a free appointment that you're having with a mortgage advisor, really, you haven't got much to lose. Although it might take, half an hour of your time, it's probably saved you hours looking online to try and find it.
Okay, many headaches.
Yeah.
Perfect, lovely. Will it cost me more money if I use a broker as opposed to going to a lender direct?
So it depends on the broker firm and whether they're charging you a fee. So in our scenario, if you're borrowing £150,000 or more, we don't charge anything for our service at all. So if you're borrowing more than that, then in effect you're getting our service, all of the processing done for you, and it's not costing you a penny.
Right, okay, perfect, lovely. So could you quickly run me through the process for applying a mortgage from start to end, just briefly?
Okay, so if you're applying with a broker, normally you'd have your first meeting where we would sit down and do a fact find and understand what you're trying to do. From there, you would potentially find the property. We would then look to do an agreement in principle, an application for you. And then we do all the processing in-house here. So the girls will chase your mortgage every day, making sure that it's sort of being processed efficiently. We look to have our mortgage offers out within 2 to 3 weeks. And from there, in theory, you could look to exchange contracts. Although, as you know, generally the whole process takes a bit longer.
Can take longer than that, can't it? But you could probably get a mortgage ready if the case is straightforward in 2 to 3 weeks from your appointment.
Yeah, it's very, very rare for any chain to be held up because of a mortgage that we're processing. It's normally searches and other things going on in the background.
Perfect. So probably one appointment initially and then one appointment to complete the application forms. How long would that appointment take to fill in all the forms?
It's normally sort of 30 to 40 minutes depending on the questions the clients have. So it's fairly painless. That's the aim.
Okay, and you can help people through that?
Yeah.
Perfect, lovely. So what different types of surveys should I consider if I'm taking a mortgage?
Okay, so with the surveys you have to have a lender valuation, which is in its own bracket. So that's really the surveyor going out on behalf of the lender to check the house is worth the value you're paying. They're not looking in detail at the property, they're really looking for key sort of risk elements for the lender. We would always recommend that you have a survey done as well as the valuation, and there's 2 types of surveys. We have home buyer survey, where they go out and look in a bit more detail at what's going on within the property and you get given a report, and then you have full structural or building survey, which we'd normally recommend for the older properties, and that's a much more detailed survey. The surveyor's there for a lot longer, looking for a lot more.
Right, okay. And so there are three types. One is the mortgage valuation for the lender.
Separate, yeah, and then
Two separate types of survey on the building itself.
the valuation isn't a survey.
No, okay. So am I right in thinking that the valuation part is usually covered, the cost of that is usually covered by the lender?
I would say it's 50-50, so we're seeing more and more lenders offering free valuations as an incentive, but there are still cases where we'd recommend that a client paid the survey fee in order to obtain a better deal.
Right, okay. So those two surveys on the building then, roughly what would the cost of those be, say, for a purchase of, say, 500,000?
So 500,000, you're probably looking, if you were doing it by the lender, in the region of sort of £600 to £700 for a standard home buyer survey, and then upwards of 1,000 if you were going to go for full structural.
Right, okay.
We do normally suggest to our clients that they instruct an independent surveyor rather than doing it via the lender. The main reason being they have the control over the survey that's being done. Right. So in that scenario, you have your basic valuation done by the lender, and then you instruct your own surveyor.
So you have two inspections separately of the property. Perfect. Okay, lovely, thank you. Okay, so what are the different types of mortgages that are available generally these days?
So at the minute we've got fixed rates, normally 2, 3 or 5 year deals. And we have tracker products available. We also have a couple of discounts. So a fixed rate, you are basically agreeing with the lender that you will take that product for the fixed period of time. The real benefits of doing that are that you can budget and you know what your payment's going to be for a set period of time. The negatives are that when you're tied in, there would be a penalty if you tried to come out of the mortgage early. So if you were moving and you couldn't transfer the mortgage, you'd have to pay a fine, basically.
Right.
And the other big thing is if you take a fixed rate and then rates go up, some people, it can be a bit of a shock when you come to remortgage and rates have gone up quite a bit.
Right.
So that's fixed rates. We have tracker rates, which track normally the Bank of England base rate, and there are flexible products that they change depending on what's happening in the market. And then the last one is discounted rates. Normally you would take a discounted rate if you only wanted a mortgage for a short period of time. They tend not to have tie-ins on them in most cases, and the idea is that you could pay the mortgage back at any time.
Without penalty?
Without penalty. The flip side is the rates aren't as good because they're discounted off of a lender's variable rate.
Right, okay.
Not as good as the other products.
One of the things I've been thinking about is looking at the actual cost of the mortgage for the term you have it rather than the headline rates, because some lenders have very misleading headline rates that look very attractive, but then you have the fees on the back of it. Are you able to calculate what the mortgage is going to be for the 2, 3 or 5 year period?
Yeah, absolutely, and that's one of the things we definitely do here. So rather than just looking and going, okay, this is the lowest rate, that might have a £2,000 fee that wouldn't be worth paying. So we actually calculate over the 2 years, what is the cheapest deal over 2 years, looking at upfront fees, whether it's got an incentive like free valuations or free legal services. We take all of that into account when we make our recommendation, and we're always recommending the cheapest deal on total cost over that period of time.
That's the one to go for.
Yeah.
Brilliant, okay, super. What are the main hurdles that people face at the moment?
I would say that the main hurdles that we're seeing are around, in this area locally in Oxfordshire, income multiples is a big thing. House prices have gone up, and the lender's policy and criteria has got harder. So for a lot of our clients, it's getting enough money, basically being able to get enough money. The other issue that we're seeing is that lenders have really tightened up their perception of sort of missed payments and potential sort of very light adverse credit. It can be quite difficult to get a mortgage if you've had any issues, sort of missing payments and things like that.
Okay. So these are things all worth knowing up front, so you know which is the best mortgage to go for and which is the best lender.
Yeah, and we always say to our clients, from the outset, it's best to be upfront. If we know there's an issue in the background, we can face that and we can find a lender who will accept whatever was going on previously. It tends to cause more of an issue when we don't know about it.
Right, and it comes up later on. They do find out, don't they?
Yeah, absolutely.
Okay, brilliant, lovely. So is a deposit still a key factor for people looking to obtain a mortgage these days?
Yes, we don't tend to find that the deposit makes a massive difference to the amount you can borrow unless you're up in the sort of 95% products. But what the deposit controls is the interest rate that you get. So the bigger the deposit, the lower the interest rate.
Right.
So our advice would always be, within reason, to put down as big a deposit as you can afford to make sure you're looking at the right loan to value bracket.
Right, and you mentioned 95% there. 95% mortgages still available,
They are, absolutely, yeah. And we see them increase over a trend. So a couple of years ago we were struggling with 95% mortgages, and now there's quite a few lenders offering them. The criteria is quite tight, so they're looking for you really to have an excellent credit profile, and to sort of show within your bank statements that you manage your money quite well. But 95% mortgages are definitely available.
Right, okay, that's perfect. So what was the mortgage market review and what impact has that had on the mortgage market?
So the mortgage market review was really a sort of shake-up review of the mortgage market to make sure that consumers were getting a level of consistency. I'm sure everybody saw in the newspapers and on the TV that they were talking about lenders asking about how much you were spending having your hair done. Really what happened is that the lenders were asked to take a more responsible view to lending and make sure they were taking into account people's individual affordability. We haven't seen lenders asking about how much you spend having your hair done, but
right.
That was the
Thank
sort
goodness.
of absolutely. That was the sort of headline sort of thing that came out of it from a consumer point of view, was the fear that you were going to be sort of scrutinised when applying for a mortgage.
Right, okay, perfect. Is obtaining a mortgage getting harder, particularly as a result of the MMR?
Yeah, I mean, one of the big changes we saw last year was the cap on the amount of lending that lenders are able to do at above 4.5 times salary. So that has made a difference to a lot of our clients, because in Oxfordshire, house prices are quite high. So that has made a difference. I think the lenders are looking at everything in a bit more detail, but by using a broker like ourselves, we do preempt that. So we do pre-application checks before we submit a case, and we will check your file and make sure there's nothing in there that's been missed, to try and sort of preempt anything coming up when a case goes to a lender.
Okay, so it is slightly more complicated, but for a good cause. Yeah. Okay, perfect. How does age affect your borrowing abilities?
So, I mean, we've seen a bit about this in the press recently, haven't we, about the availability of lending when you are getting a bit older.
Yes.
Most of our lenders now will use the standard retirement age of 67, but a lot of them will go to 70 or 75 if we can justify how you're going to pay that mortgage. We do have a few lenders, smaller building societies, that will take mortgages right up to sort of age 90.
90?
They will, absolutely, yeah, if the case sort of is good enough.
Right.
So they're really looking for it to be very low risk lending, but for whatever reason there's a need to do that.
Yeah.
So we do have options, there's just not lots of them.
No, okay, but it's certainly not, 60 is the maximum.
No, absolutely not. And we still see people who think that 60 is the maximum age.
Yeah.
I would say 67 is around the average, but we regularly will go to age 70 if we can prove that you can pay your mortgage past 67.
Bit of time for me left yet then. Lovely, okay. Do you have any tips for people looking to move this year?
My sort of top tips if you're getting ready to look to move or to purchase if you're a first-time buyer, the main one is checking your credit profile, because the credit profile in the background has a big impact on the mortgages. You can do that by checking with Experian, or Noodle is another company, and Equifax. They all hold your credit record for you, and they will give you an overview of what your credit profile looks like. There will be sort of markers on there, so you can take their advice and improve your credit score, which helps. We would also say to get advice as soon as you can, because we can help you plan and make changes if there's something obvious that needs to be corrected.
Right, so you can actually improve your credit rating just by changing some of your behavioural patterns.
Yeah, so things like being on the electoral roll, that will gain you points. So especially with our first time buyers, they might have recently moved back in with parents to save deposits. They don't always register to go on the electoral roll, but that instantly gains you points.
Right, but if they're coming to see you early days,
Yeah.
you can sit down and say these are the things you need to get.
Yeah, absolutely, or they can do it on a phone call. So we book telephone appointments and we can just run through it over the phone.
Right.
It is worth doing. We have a pack that we give to you which sort of summarises what we've said. We do a cost of moving for our home movers as well.
Yeah.
So a lot of people forget they have to pay an estate agent, for example, and and that there's lots of solicitors' costs when you're buying and selling. So we sit down and highlight the costs, talk about stamp duty, and make sure that people are sort of going into it fully understanding what they're looking at.
Everything money.
Everything money.
Perfect, brilliant, lovely. Repossessions seem to be falling year on year from around 50,000 in 2009 to just over 10,000 in 2015. And do you think this is partly due to more responsible lending then?
I think it is, yes. I mean, we've seen the end of self-cert mortgages.
Self-cert?
Self-cert, so that's where applicants were able to self-certify their income. So you could sort of present a case to a lender saying that you earn 50,000 and they wouldn't ask you to prove it.
Didn't have to prove it, all right.
So they stopped that, thank goodness. So in that respect, we don't have people applying for mortgages that are potentially not affordable. I think the lenders have tightened up on their criteria around checking affordability, making sure that an individual person can afford the property they're buying, not just an income multiplier, which is what we used to do before. So for example, you have two applicants, both earn 30,000. One might have no outgoings at all, the other might have a horse and they're funding stables at £500 a month. So they're very much sort of looking at that now and taking into account individual sort of profiles as well.
Right, so it's more about your ability to repay the mortgage than it is to qualify for one in the
Yeah,
first
but there's
place.
an element of that.
Yeah.
The other big change, of course, is that the reduction in interest rates. So there will still be clients who are sat on variable rates, who are just about affording their mortgage payments because rates are so low.
Right.
And that's had an impact as well. So the lower interest rates, I think, has probably stopped repossessions to get as affordable.
Perfect, lovely. Okay, so that I think wraps it up for today. There may well still be some unanswered questions out there, and if you've got anything else you'd like to put to Laura directly, her contact details will come up at the end of the video. But for now, I'd just like to say thanks very much indeed to Laura Lamb for her time today. Thank you, Laura.
You're welcome, it was a pleasure.
Thank you, and thank you all very much indeed for watching again this month. Next month we'll be talking to you about the property price index, as you know, where we're looking at the individual house types, the individual developments within Witney and the villages surround, so that should be a good watch for next month. But for now, thanks very much indeed for watching and see you soon.